Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors, February 7th, just after the close. Headlines, headlines, headlines. Impeachment, coronavirus, China-U.S. trade talks. They keep coming at us, and the market keeps taking them in stride, moving forward. Sure, we're backing and filling over the last couple of weeks after making those new highs, but those headlines can be used properly to enter positions as well. You know, there's been an awful lot of hand-wringing from financial TV, from blogs, from different articles about dampened growth and what the effect of the virus is going to be on the world GDP, U.S. included. If you're just watching headlines, you can tend to get panicked out of a very reasonable investment strategy and investment allocation. Today I wanted to go over some of the things at Cumberland we use to try to work through those headlines, to try to see really what's happening within the markets. Relative strength is one of them. We use relative strength on a daily, weekly, monthly basis to try to compare asset classes. Fixed income versus domestic equity versus international equity versus commodities versus currencies versus cash for that matter. Where is strength? We know money tends to go where it's treated best. Where is money flowing and how can we position and take advantage of that? I wanted to put up a quick chart to give you an idea from a relative strength basis where asset classes are positioned right now. Currently, as you can see, the top, I'll say all the way top third of the matrix, and the top is the strongest, the bottom are the weakest asset classes as represented by ETFs. The top third dominated by domestic equity. The bottom third is where you would see your normal fear or inverse securities, led by, I highlighted SH, and you can see a number of short securities as well as commodity-driven securities. So when we take a look at this, what does this tell us position-wise? It tells us we want to stay long, and we're quite long in our portfolios right now. We're comfortable with our exposure. Add in that we did get that buy signal on our quant strategy last week, and that gives us a little further comfort position-wise. But as long as these domestic equities stay in the top quarter, the top 10% of our matrix, we know that they're showing strength versus other asset classes. Just as an analysis this week, with some of the negative talk being bantered about in terms of the equity markets, I wanted to go back to February 6th of 08. February 6th of 08. S&P 500 year to date back in 08 from January 1st to 06 down about 8%. A little nasty little pullback, certainly something that we normally see on an annual basis, but down about 8%. This is what the matrix, the relative strength matrix produced by Dorsey Wright looked like at the close of business February 6th of 08. What you'll notice is the top quarter, top third of that matrix is dominated by commodities and inverse or short hedges or securities from a relative strength standpoint. Look at how far down the matrix you have to go before you run into a domestic security, QQQ. I've highlighted there at number 23. Very different picture back in 08. Now keep in mind, we're only 8% off year to date. You were still saving 30% of the downside in 08 alone by recognizing that domestic equities, and international for that matter as well, but not to the same degree, domestic equities had already begun a severe weakening versus other asset classes. Maybe not in price, but in relative strength. So relative strength is something we pay an awful lot of attention to on a weekly, monthly, quarterly basis. I thought this would be an interesting exercise, especially with much of the negative headlines being posed, to try to take a peek at underneath the hood in a market that was sitting on the precipice of what I call disaster, having traded through '08 and remembering back to even '01, '02, where the NASDAQ was down, the NASDAQ 100, the Qs were down 75%, peak to trough. This is what we look for to become negative. We would look for a complete weakening of an asset class. Go back to that first matrix. We're not seeing it here. Does that mean we can't get weakness and drawdown? Certainly not. But in terms of full asset class movement, we're still in pretty good shape. February 14th for our local clients and friends over at the University of South Florida, Sarasota, Manatee. We're having our global trading day. Have some great guests talking about fixed income, talking about coronavirus, talking about a number of different ways to structure portfolios. Feel free to join us. For our friends that are not in the Sarasota area, we put many of those videos up on our website. So make sure you get to the site and take a look. Have a great weekend. We'll see you next week.